Investors are adopting a wait-and-see approach following today's 231 billion T-bills auction. Meanwhile, traders at UBA say traders have opened short positions ahead of next week's bond auction. Chuka Nwachukwu, the head of market at ALM and balance sheet management at UBA, joins me now for more market updates. Thank you so much for your time today, Chuka. Let's start with the market this week and get to that T-bills auction. We're seeing that the 231.8 billion is being offered across 3 tenures. But how do sentiments compare with your expectations and also previous auctions?
Okay, thank you. We've seen, a quiet market starting from Monday. This is as a result of a system liquidity, being very tight. System was in repo of over 300 billion yesterday, and this morning is around slightly below 100 billion. So that has actually affected trading. On Monday, we saw a bit of interest, especially on the bond longer end of the curve for the bond, the 2053. This is as a result of the fact that the bond calendar, the much awaited bond calendar, finally came out on Monday, and then we saw that the 2053 wouldn't be on offer. So there was also an introduction of a 2027, and so a lot of people who have gone short on that 2053, had to cover from the market, and that's why we see quite a number of interest in that in that particular security. And now moving into today, like you rightly mentioned, we have NTB auction. The result is actually out. 231 billion was offered, and then that same amount was sold. However, we saw the subscription rate of well over 1 trillion. We saw also elevated rate came up about 314 basis point upward movement from 8.4 to 11.52, and so that has actually been what has been happening in the market so far this week.
Let's get back to the liquidity situation and your expectations going forward, and more or less how you see this impacting interbank rates going forward.
Yeah, so this situation, like I mentioned earlier, is pretty tight. It's in repo, but then we expect to see FAC between now and Friday, at most early next week. I understand that the FAC meeting has been held, and then about 1.1 trillion has been approved. So if that happens, then the liquidity will improve. However, due to the tightness in the system, we've seen rates inch up from 15% levels to between 19% and between 19% to 23% as at close of business yesterday, and that has actually continued today. So rates will continue to go up as long as the system liquidity remains tight.
All right, then thank you so much for your time. Definitely keep an eye on the markets and see how things continue to unfold there. Chuka Nwachukwu is the head of ALM and balance sheet management at UBA.